taking price higher. So if I see continued strength in the offer above IB and relative weakness, and as it pulls back, and this is kind of an interesting thing, if it pulls back and I see on the bar on the probe down, I see weakness at the offer, and moderate strength at the bid. I mean, the likelihood is the color is going to be red, but the numbers are moderate. They're not large numbers at the bid pushing price back down. Then that gives me even more confidence in a long on a pullback to a low volume area on the day. And the reason is because what is likely happening in the print, it's not that the buyers are all of a sudden getting real weak. It's, in fact, if I saw strength at the offer and then strength at the bid at the top of this with somewhat of a finish and price coming back down, I might not take that long off the low volume area. I might get an initial bounce, but that tells me that there are significant sellers that have conviction up at the top. But if I see weakness in the offer as it's descending and coming back down to that low volume area, that just tells me that buyers are likely managing their inventory. They brought price up, they're letting go a little bit, and I'm looking to go long back at that low volume area. That's just a little bit of nuance. Of course, you got to really watch the auction and see what's happening. The print is always, always, always your source of truth. The print is always your source of truth as you look to enter your trade, because that is the most current context relative to buyers and sellers. And again, once you click that button, it's those, especially after the first couple of minutes after you click on the button, it's those buyers and sellers that are going to start either supporting your trade and giving you some confidence in the trade, or it's those initial buyers and sellers are going to start messing with your psychology and start telling you something different. So that initial push or the initial auction after you get into the trade becomes very important. So I put in my IB, and the IB is meaningful to me. You know, if I get 6, 7, 8 points, that's typically average. If I start seeing an IB above 8 points, something's going on. If I see a big IB, I'm looking at the profile. Is the profile relatively broken? Is it starting to build out and give me high volume areas, maybe 2-point high volume areas, but starting to build volume as it goes up? That could be the sign of a trend day. So then I'll also put in the close for the day, and the close for Friday, one second, I think I had the close at 23.50, and I can use this chart right there and see my close at 23.50. So I put my close in at 1923.50. Now we know the close is important because there's a lot of quote-unquote fill the gap opportunities, and if price opens up and starts moving back towards the close, there's a high percentage of the time, and I would tell you that percentage can be disputed, but there's a higher percentage of the time that price is going to attempt to fill the gap to try to hit that close, that settlement prior to moving in the other direction if it's going to move. So it's a good test area. And then I want to know, was it in or out of value? When it closed, was it inside or outside of value? And this is value. All this in this yellow is value. So it closed higher. It closed in value to the high side. And so what I will put for me is just a note, inside high. And all I'm doing is saying it closed inside of value and it closed to the high side. Now if it closes outside of value, right, typically what we're going to see is, depending upon the day, but typically you're going to see not as much white. This profile is white on the edges and value is yellow. Not going to see too much white, but that's a pretty significant story or end of the story for me. If on Friday this closes outside of value, what it typically means is at the end of the day, instead of all this buying resulting in end of day, especially on Friday, selling, no sell-off, that they further pushed up into the day and closed out higher, which shows me strength. And so one of the things that's important is I want to look at the auction on Monday, and if I can see relative strength at the buyers, then some of the locations that I have chosen below for potential longs, if I have a good print that shows me a long, I'm going to have more confidence in that long. So where it closes relative to value is important to me. Closing swing, again, that's the 2500 chart. I had that marked at 23.25. I'll go through that here. Let me bring that over. If you hear any noise in the background, it's my some of my kids. Friday night or Sunday night having a little fun. All right, where's that 2500 chart? There it is. So let's go ahead and mark the, show you how I mark the closing swing for a day. So here's the end of the day, and price was moving lower, lower, moved down here right before the end of the day, bumped up, tested down again. After the close, tested up to 1926.25, did it a second time, and couldn't get any further. This is the closing swing high, 1926.25. Or this is what I'm marking as my closing swing high, 1926.25. Don't know why it does that. So then I look and I see where did it test down to before the end of the day. There was the end of the day. It tested down to right there, 23.25. So that was the final push by sellers. And now a lot of people that I teach this to, what they don't get, remember, I care about the last push by buyers and sellers. Why? Because when this market opens back up, I want to know if there's still some conviction level, if there's some relative importance around these numbers to the participants of the auction. So you'll hear me say that oftentimes when the market opens back up, these numbers, these closing swing high and closing swing low numbers, not all the time, and again, the print has to prove it, but a lot of times these will have relative meaning to the auction. I mean, you can see what happened today. Just as the market opened tonight, where did it bounce off of? Bounced off of 23.25, right? It came up through closing swing high. This is tonight when it opened Sunday. Moved up 29.50, moved back down to 26.25, and off of 26.25 was a 1.5 trade. Now, I'm not suggesting that you trade off of this, but it's an opportunity. And you can see that right now, both of these levels have meaning to this market. Why close and not settlement? I have just found that closing price is very consistent as a target, and that may just be because a lot of people use it, but that's what I use. In my experience, that's what I found to be the place where price tests to the most. Yeah, and DB is right. If you look at a daily chart, previous day's close equals settlement. If you look at an intraday time series, it'll give you a close price instead of settlement. And I just want you to know I use the close. And the reason is because in my experience, the market the next day will look for this number more so than that settlement number if it's different. So that's what I use as a target area. And if price comes down, I'm looking to see what happens around that close settlement. I'm not saying it won't hit settlement. That's just a number that I use. Would I use the same volume chart for the 6E and 6B? Absolutely not. The ES, in fact, at night here, because the volume is significantly less than during the RTH session, This Sunday night is about the only time that I would recommend knocking this down to about a 1200 chart. I would cut this volume in half. But if you're looking at like a 6E chart, and I have to go back and look at the average volume at the open and at the close. And remember, in just about every auction, doesn't matter what you're auctioning, if there's a time frame to it, meaning a start and a finish, start and a close, beginning, close, the majority of the volume, let me put it this way, where you'll see a volume spikes, a lot of bids, a lot of offers coming in a short amount of time, is at the beginning of the auction and at the end of the auction. I don't care what you're auctioning. That's typically going to be the case where there's a flurry of activity up front and a flurry activity at the end of the auction, which is why I marked the opening swing and the closing swing. So make sure I answered that question. So again, IB is important. My closing swing is important. You can see this bouncing off this area right now. I would just tell you, based on the volume profile for this evening, this looks finished, somewhat finished to the upside. I wouldn't be surprised if it starts testing down through this closing swing high and possibly all the way back down to the closing swing low yet tonight. But you know, right now this is still a low volume area, and the print. We'll get to the print in a bit. Anyway, so to complete this chart, closing swing high again was 26.25. Closing swing low using that 2500 chart was 23.25. And I put in, this calculates the closing point range, which is just gives me an understanding of how big that swing was. How big was the sell-off at night, the night before, if there was a sell-off. And I want to see if, again, that next morning, do I have the same kind of conviction level based on where price opens? Because if we had a big sell-off at the end of the day and that closing point range was 5-6 points and price is opening towards the bottom of value, that would tell me the overnight session still is short-minded. It's accepting price down here, and I might give a little bit more weight to a short trade at a test, expecting some level of test higher. Let's say I pick a low volume area above. I might give more weight to that short trade. Again, the print is going to tell me whether or not to get into it. But you know, my read on that would be we have consensus overnight. We're getting acceptance here. I would look above at my low volume area. Where's my trade? And look for that initial short trade. And as long as the print gave me the confirmation, then I would get into that short trade. Again, you still have to watch it and manage it because every day is different, as you know. And what buyers and sellers are doing one day will and can be completely different than what they're doing the next day. So price high of day is pretty easy, right? That's just this high at 28.25, and this low down at 03.75. So I can see by my numbers that there was a fairly significant range on Friday. 24.50 is big. It's a big range for the ES. And I can also see that my open and my opening swing gave me about, what, 2.25 points. So at the open, there wasn't a lot of activity. There wasn't a lot of movement up and down. And from my IB, I can see about 8 points, so a little above average. So we had significant range extension on the day, right? 24.50 minus the 8, about 8.5 for the IB, significant range extension, and we closed inside high of value. So just looking at these numbers tells me that there was acceptance of price higher. And then when I add these other numbers, high of value is 28.25. Low of value is 10.25. And VPOC, otherwise known as VPOC, 1926.75. So just looking at these numbers, if you didn't even give me a chart and I just looked at these numbers, I would be able to give you a story for Friday. And that's what I'm looking to do, because here's my experience, and this may not be for everybody. Here's my experience. When I actually take the time to write these numbers down, I got to go back and I got to look, okay, what was closing swing, what was opening swing, what was IB. It's a pain in the butt. Okay, none of this is really easy to do. It gets easier to do and it goes a lot faster, but it's a pain in the butt. But I can tell you, nothing else for me has ever provided for me the overall context of the market, like plugging in these numbers and understanding what these numbers mean. And so when you get to the point where you can tell a story just from the numbers as to what the market was trying to do and how good of a job was it in doing it, I will tell you that if you can do that, and when you can do that, you have a really good feel for the instrument that you're trading. If the numbers are just numbers and so what, I'm just doing it to plug the numbers in. If they don't have meaning to you, then the exercise is kind of in vain and you won't get out of it what the value of actually going through the numbers are. So the next thing I do is I go through the volume profile and I start completing this chart. And so again, what we're doing is with the homework. And our goal here tonight, I probably should have started with this. Our goal here tonight is to go through the homework session, how you actually complete the homework. We did a little bit of this on Thursday and Friday, and so I wanted to go over it again. And then how to take this information and translate it into a trade plan for the next day. And then in the morning, looking at your trade plan, looking where price opens up and the scenarios that you've built, and then making a decision in the pre-market relative to the context. Again, very important time, 7:20 a.m. Eastern to the open on the ES. You almost want to do a separate volume profile just for that time. Compare that to the overall overnight and see if the overall sentiment is changing from the overnight. So what I do is I go into my daily, I put my close in right here. So the close again for Friday was 1923.50. So I'll just put that in, 1923.50, and you can see it changes down here. And so what I want to do from the close, and this is my most current context, so I go to daily. From the close, I want to know where my low volume, high volume areas are below the close and above the close. So here's the close, and if you want to call this, the high volume area really is up here at 23.75, and then volume point of control above. So we can say 23.75. I'm going to show you why we use these numbers. And then volume point of control up at 26.75. And then below, I want to understand where are my high volume areas. And I have one here at 1913. And I have one a little bit lower down here at 1906. So this is pretty easy, right? Relatively easy just to find your levels and pop them in. Same thing with the low volume area. So there's clearly a low volume area right here above at 24.50. So above, I just want to type in 1924.50. And we have a low volume area right here that has some relevance at, say, 20. Low volume area is at 20.25. So I'm going to put 20.25 in here. Below the close. And what's interesting now is we have basically a range. What you could do is you could put in 1825 and you could put in 15, but we have a range of low volume from 20 and a quarter down to 15. So the way I typically represent that is I will say 1920 quarter to 1915. Now remember, the context of just plugging the numbers in tells me that buyers got conviction, and they got conviction after IB. They never relented. They never let go. Sellers could never, they tested back down to 2050 twice. They could never get enough conviction to take price back down, so we closed higher. So for Friday, doesn't mean that Monday will be the same, but for Friday, the relative context for the ES is that we have buyers engaged, and they engaged here at 15, and they held back here at 2050. So this range becomes very important for me for Monday. And if price starts dropping through 2025, that's fine. Comes through this low volume area, 1850, right? Because it may stop right there. But this is more significant because this is where buyers got engaged again, right at 2025. So if price on Monday starts coming through this area, I'm fine with that. That's fine. It is what it is. I likely would not trade in this low volume area because once it breaks through, I can see the activity by the buyers. Buyers had a lot of conviction through here. And at any point beyond this low volume area here at 20 and a quarter, at any point these buyers could re-engage. So I'm not interested in trying to take a short down to here and a long back up here. What I'm interested in seeing on Monday, if price comes back down below 20, is I want to see how far they will let the sellers go. Will they let the sellers come all the way back down to 15? If so, that might be an area of trade for me. I will definitely look at the print, be looking at the print around 1550, 15 quarter as price, if price comes back down here. And so I can already tell you that as part of my trading plan is if price opens up above this level at 2050, 20 and a quarter, I'm going to be looking for a long on a test. If it opens up here, I'm going to be looking for a long off a test of 2050. So if price comes down 2050, 20 and a quarter, price comes down and the print suggests to go long here, I'm taking the long. If it comes through, I might decide to put my stop right here at 1950. I might give it very little room. You have to know that the ES will, especially early in the morning, there'll be stop runs. It'll test, it'll come up, it'll drop, and then pop back up. You know, take out stops and pop back up. And you just can't avoid that. There's no way you could avoid that. The only thing that you can do is you get into the trade at 2050. If you see strength coming back into the bid, you get out. And one of two things are going to happen. You either we're going to get stopped out anyway, or this thing is going to stop and turn around, or it's going to keep coming likely all the way through. If it starts really getting any volume back into this range, it's likely coming back through and testing 15. And you don't want to carry the trade that long anyway. And so the trade relatively, I don't want to say it's easy, it's objective. You're looking for a long when the print tells you to get long at 2050, 20 and a quarter. As long as the print tells you that, right? Print meaning you have weakness at the bid and strength coming back in at the offer. And especially if it's early in the day and the volume profile shows a finish, shows a tapering of activity of volume to the going away, and you get that weakness at the bid and strength at the offer, you take that trade as close to this area as you can. If you start seeing strength coming back into the bid, you can just get out of the trade at break even, minus 1 tick, 2 ticks, whatever it may be, and it may only tick down 1 or 2 and pop back up. But the point is that you can recover from a 2-3 tick loss relatively easy, because if it pops back up and you start seeing weakness at the bid, a lot of strength coming back in the offer after a little check down, you can just get back in. You're only down 2 or 3 ticks. So that's one way of managing your risk. I mean, it doesn't prove anything by being willing to hold a trade for a certain amount of time. Because here's what I want you to understand. If price comes through this area, it might turn at 1875. So this is the way you got to look at it. If the print tells you to get in at 2050, 2025, and you get in that trade, what you have to be able to do is say, I am willing to carry that trade down through this low volume area to 18. So you have to be able to say, I am willing to carry this trade 2.5 points. And for me, especially early in the morning, that's too much. I'm willing to take a 2 to 3 tick stop. If it stops me out and a lot of strength comes back at the offer, weakness at the bid, and it pops up, that's okay. I don't care. That's only 2 or 3 ticks. I can get back in, because the probability here is if this level holds and buyers actually do step back in this area, that price is coming back up here, possibly back up through VPOC, especially if in the morning we get high volume area up here. Price opens up here, we start getting a good amount of volume back and forth, and it finally tests back down to here. I don't care if it takes me out at 2 or 3 ticks. I really don't. But because I'd rather get taken out at 2 or 3 ticks and have it pop back up and get back in, than for me to say I'm carrying this trade 2 points. Or worse yet, if I don't know really what's going on, right? If I didn't know that if price comes down, say to 1950, it may turn there. It may turn anywhere in here. And that's the whole point of this, is you don't know. And buyers have shown strength all the way up through this area. So they could take it down to 1875. They could take it down to 16 and step back in. But I do know that they've shown strength all the way through this area on Friday, so they could step in anywhere. But if it starts coming down through, I want out. Keep my stop tight, because it makes sense from an auction standpoint. And then if it comes all the way down, back down to here, I'll look for the print to confirm a potential trade. If it does, I'll get in long. And what I'm going to start doing now is, because of this weak structure, my expectation is if price comes all the way down here to 15, that it is going to spend, especially if it started up here. If it starts up here and breaks through and moves all the way back down to 15 level, my expectation is that it is going to spend time between 15 and likely 20, maybe even 1850, 20. So I'm not going to hold for VPOC, right? I'm going to look to get, if I got stopped out, I get long again. I'm looking to get my loss back and then some. So I'm going to start looking right about the middle of this range, around 1775, in front of that low volume area right there. And I'm going to look to start scaling. And if the print says weak at the offer, strength at the bid, I'm going to scale. I'm going to scale, because my expectation now, especially if the market opens up here and drops back down into this weak structure where the buyers had conviction on Friday, and now they don't, because we're starting to build volume and we're starting to get two-sided trading. If that's the case, now this is a good trade still, but I'm going to start looking to take some off here, potentially back up here. I need to see strength back at the offer above this level for me to start having confidence in this target. Does that make sense? Okay, good. Again, what I care about in the way that I trade in everything is, the only thing that I know is that I can't control price. I can't control price after I get into a trade. So my best way of trading, my best opportunity to stay successful in the long term, is to make sure that I'm trading in areas where I know I'm wrong, because I can only manage my risk. I can manage my profit as price moves in my direction, but the one thing for certain I can manage is my entry and my risk. So if that's the case and that's all I can manage, then I need to put myself in a position of being able to manage those things best. And that's really the strength of the volume profile. And when you combine this volume profile with the overall print, being able to see, let's say you're looking to go long at a low volume area, and you can see in the print that the bid is getting weak, and you can see the strength coming back into the offer. You know, what more do you need? You know, for a trade opportunity. Again, there's nothing to say that you get into that trade and the offer isn't going to get weak again and strength coming back in the bid. But at least now you know